Being self-employed has its perks, but with these perks also come responsibility. When you work for someone else, your taxes are withdrawn from your check and conveniently sent to the IRS for you. When you're self-employed, this responsibility is yours. To be certain that you're paying no more than your fair share of taxes, be sure that you're considering the following 9 tax deductions, which should be included on your tax return when you're self-employed. Claiming your self-employment deduction reduces your Medicare and Social Security taxes by half. You're entitled to a tax deduction for any workspace that you use regularly and exclusively for your business, whether you rent or own the space. While this is generally done on the honor system, an audit may require that you produce. While this is generally done on the honor system, an audit may require that you produce proof of your office space expenditure. If your office space is in your home, you may deduct the business percentage of your mortgage interest, depreciation, property taxes, utilities, insurance, and other expenses necessary to maintain your home office space. For example, if your home office space represents 10% of your home's square footage, you can deduct 10% of your electricity bill. Each year, you have the choice of 2 calculation methods for office space. You can calculate the specific amount of each expense, or you can multiply your home office footage by a rate provided by the IRS based on your office space size. The latter method, while simpler, limits the size of the office space and reduces the number of itemized deductions you can take. Phone and internet lines are an imperative part of every business. Therefore, the IRS allows deductions for them. Be mindful of how much you deduct, as only the portions dedicated to your business may be deducted. For example, if you have one cell phone that you use for business and personal purposes, you may only deduct the portion of the bill that's attributed to business activities. If you're not eligible for insurance coverage under a spouse's employer's insurance, the IRS allows you to deduct medical, dental, and sometimes long-term care insurance premiums. This also includes a spouse's and dependents insurance premiums as well. Some meals can be deducted from your tax return if you're self-employed. Half of the cost of reasonable meal expenses while traveling or entertaining a client are acceptable deductions. However, other entertainment expenditures that may be deductible are subject to a few strict limitations. When you travel outside your business's home city, or you're out of town for more than one workday to conduct your business, you may deduct the total of your expenses. If your trip is a mix of business and pleasure, you'll be subject to some complicated limits for your travel deductions. Wear and tear on your car, gas, and vehicle maintenance can be deducted, but be sure to keep stringent records to refer to in the case of an audit. Interest on business loans and credit cards are partially deductible, but be careful about overestimating your tax deduction in these financial transactions, as these savings don't always prove to be cost-effective in the long run. Books, magazines, webinars, classes, and industry subscriptions may also be deductible. Armed with this basic information about tax deductions to claim if you're self-employed, we hope that we have better helped to prepare you for self-employed filing. When in doubt, consider the question. Is this necessary and ordinary for a business in my industry? For more information on the Federal Tax Code, take a look at our blog today. Thank you for watching.